Good afternoon, everybody. Sorry for the slight delay. Trouble with my laptop. Welcome to our auditors. Nice to see you here. We'll be hearing from you later. Our first item, minutes of the last meeting. Has everyone had a chance to have a look at those? And may I sign those through on fair report? Thank you. Apologies. We have apologies from Councillor Adams, Bond, Duffy, and Slavaski. Any other apologies from the floor? Any declarations of interest? Item number 4, approval of the Statement of Accounts 2023-2024, report to the Director of Finance and S151 Officer and Finance Manager and Deputy S151 Officer.
Thank you, Mr. Chairman, and good afternoon, members. First of all, in presenting this report, I'd just like to reiterate that exactly as per 2022-23, the final conclusion of the audit process for 23-24 awaits the finalisation of the audit of the Statutory Pension Fund, and that is out of both our and our auditors' assets control. Assets have, however, stated that their audit is ostensibly complete and they anticipate an unmodified opinion. So the recommendation for the committee today is to approve the accounts presented and to confirm delegated authority to the chair to formally sign the accounts upon notification that final completion of the audit has been undertaken. If, however, in the unlikely event that anything significant arises out of the pensions audit or final audit checks, the committee will reserve the right to re-receive a full set of accounts for approval. So the statement of accounts within the member committee packs is, as always, a very complex and comprehensive document covering over 130 pages. My aim in the next 5 to 10 minutes will be to draw out and explain the key highlights, and in doing so, draw out some key links between this report and the current medium-term financial strategy that has been drafted and that Section 151 officer discussed with members on Monday. Following my report, I'll be happy to answer any questions that members may have. So as mentioned, the 130-page document is very technical. The bulk of the statement is constructed in accordance with consistent accounting parameters in order to allow comparison of our statement with other local authorities and the accounts that they present. We do, however, have some leeway to include a narrative report in the accounts in a format consistent with how we as a council prepare and report against our budgets throughout the year and how we set our budget every February in the medium-term financial strategy. This is shown from page 18 of your pack, and that's where I'll start drawing out some of the key elements. For members that attended the presentation by Beck Mayor on Monday, they'll be aware of the importance of the general fund balance and how we monitor and report our accounts throughout the year. This general fund balance is drawn upon when we spend, in simple terms, when we spend more money than we receive, or added to if income exceeds expenses in a given year. Forward projections to this balance were the foundations of the presentation on Monday, and it's also a key strand within the statement of accounts. First of all, therefore, I'd like to draw members' attention to page 18 of your pack and the line second from the bottom, the appropriations to/from the general fund balance. Appropriations being a technical term effectively for withdrawal or deposit against that general fund balance. When Council approved the budget back in February 2023 for that particular year, The expectation was the council would be drawing 1.772 million from general fund reserves. In the event, the state accounts before you show that we only drew £342,000 against the general fund, an improvement against budget of 1.429 million. Two key reasons for that improvement. One that's been reported on several occasions to this committee because of your interest in Treasury is the fact our Treasury receipts were far greater than initially anticipated. And the budget that was drafted, we're expecting quite low interest rates, but in fact, interest rates remained high throughout the course of 23-24, and they enabled a significant betterment against the expectations, which greatly assisted in the bottom line. Another area of significant improvement to council was in planning income. It's a particularly volatile budget. Our planning service often don't know how many applications for planning approvals they're going to get through the door in any particular year. So we budget quite conservatively and prudently for those. And in 23-24, we benefited greatly from the volume and an extent of planning approval applications that came through. In addition to that, across the board, across all our cabinet areas, our budgets were, I think, very well managed. And that helps. It means that the windfall items that we received, not itemised above, weren't masking overspends elsewhere, but became genuine windfalls that were able to assist the bottom line and enable us to present an outturn far, far greater than we'd anticipated when the budget was set. Moving on to the statement of accounts itself, the more technical part of it. I first of all draw members' attention made to the core statements from page 29 of your packs. For those members who earlier in the year attended the training that ZET's delivered on interpreting the financial accounts, you'll recall how the four core statements, that being the comprehensive income and expenditure statement, the balance sheet, the movement and reserve statement, and the cash flow statements, detail the fundamentals of the council's performance across the year. As a general rule of thumb, all the other accounts provide background information and further details to evidence the core statements. The comprehensive income and expenditure statement, as its name suggests, includes all income and spend that enters council accounts. Both the amounts easy to recognise against the service areas as listed, also the less tangible accounting entries, which can include asset valuations, both changing positively and negatively, which have an impact on the income and expenditure of the accounts. And that can include, for example, our fixed assets like this building and movements in the pension fund. Movement and reserve statement exists helpfully to disaggregate those movements to the particular reserves of the council, which helps the reader to focus on changes to the usable reserves of the council. And crucially, the balance sheet details a snapshot of the financial position of the council as at 31st March 2024. And I'll draw members' attention to the balance sheet on page 30 of your pack. So return to the draw I mentioned earlier of £342,000 in the narrative report. The reserve position shown in the bottom half of the balance sheet shows the general fund has reduced from 8.672 million to 8.331 million. The difference between the two, excepting a rounding, is the 342,000 change as a consequence of the improvement or as a consequence of our spend versus income during the course of the year. And that's where that reduction is recorded. And going beyond the statement of accounts to other meetings and members attending, that 8.331 figure is one worth committed to memory. It's a figure that is in the MTFS as a starting position for this year, which will then be adjusted up and down according to this year's current expectations. And again, from Monday, members will also remember the importance of the 1.5 million figure that was quoted and questioned about as the Section 151 officer's assessment of the minimum required level of reserves we need as a council for safety. A few other key figures to draw out. The £15 million borrowing you see in the statement of accounts in the balance sheet is the amount that was lent to us 3 years ago to finance the capital programme. Note 19 which is on page 88 of your agenda packs, details the capital financing requirement, which incorporates both the external and internal borrowing to finance the capital programme. This includes the minimum revenue provision, which is an element of the capital programme financed each year through the general fund. Members will note in the subsequent reports that ZETS have reported this amount is comparatively low across the sector when compared to some other local authorities. And as we go through the medium-term financial strategy process next year, members will note the medium revenue provision is due to increase over the course of the MTFS, but we'll take note of the ZETS recommendation and consider carefully if our existing approved strategy remains prudent. On the balance sheet, at face value, our debtors position appears to have gone up from 4.7 million to 5.2 million. Note 14 on page 72 gives further details of this. This figure does include a number of one-off items, including an insurance payout. Members will recollect the fire at Unit 4E, 4 Ashes, and the figure shown does include anticipated insurance payout for that, alongside one-off housing benefit subsidy payments that are due to us. The main item that we like to control, as detailed in note 14, page 72, is the trade receivables, effectively income from our commercial estates that form the bedrock of our medium-term financial strategy. And it is very pleasing that that figure is moving in the right direction for us, showing as 1.3 million in the prior year, down to 1.1 million in the year just finished. You'll notice in the balance sheet there's an asterisk against the pensions asset. I'm sure ZETS will discuss some intricacies of the movements and changes and how we have to account for the pensions asset when they come to do their report. In addition to general fund reserves, the usable reserves accounts also include earmarked reserves. These reserves, as the name suggests, set aside for specific projects or known future liabilities or risks that the council may face. These are detailed in note 9, page 59 in your pack. But to give just one example that members will be familiar with, do you note the earmarked reserve that's set up in 23-24 to cover the potential costs of repairs of closed churchyards that the council may have to face in future years. Just as one example of how earmarked reserves are set up and how they appear in the statement of accounts. I will say that earmarked reserves are increasingly monitored and scrutinised by our corporate leadership team and cabinet to ensure that any opportunity exists to release funds even back to the general fund are not missed, nor conversely, if we need to put money into earmarked reserves to protect the general fund from any identified or potential risks in the future, are also identified and picked up upon. In conclusion, we feel the outcome presented is extremely positive. We have, as mentioned, drawn on our general funds by just over 300k, but by a significantly lower amount than anticipated when the budget was set. And finally, I'd like to express my thanks to Paul and Martha from ZETS and their entire team for the help, advice and expertise they've provided throughout the audit process. And we look forward to seeing their final audit opinion and in due course, working with them again for the 24-25 audit. Thank you very much. I'm happy to answer any questions that members may have, Mr. Chairman.
Thank you for that very detailed report. Any questions? Oh, I think you summarised that pretty clearly. Before we go on to approve the statement of accounts, we're going to take the next item, which is report from our external auditors. As that's, I'm not sure who's leading. Over to you, please.
Thank you very much. My name is Paul Grady. I'm a partner at ZETS. Next to me is Martha, who's the manager on the audit. The report that you have in front of you sets out the totality of the findings that we believe should be brought to your attention before you then make the decision as to whether to approve the accounts or otherwise. As John said, the local government accounts now are an incredibly complex beast, and and a very long beast. And they're complex not just because of the international financial reporting standards that now apply to these accounts, but also due to the complex rules in terms of capital and statutory overrides, which also need to be accounted for within these statements, and various adjustments need to be made to them. You might be aware that many councils across the country are in a position where there is for various reasons they're unable to obtain audit opinions, and Staffordshire is one of the few that can. And I think one of the key reasons for that has been both the capability of the finance team in question, but also the nature of the engagement, and that's not just at the senior level, that's across the team. And then by the nature of engagement, I don't just mean that it's friendly, it's also responsive, it's prompt. Where there have been issues and difficult complexities to talk through, the response has been excellent from the finance team, and in terms of the quality of what we received, and overall the quality of the accounts was very good, and the quality of the working papers is very good. And with all relationships, the true test is where there are changes to be made, as John has alluded to, in terms of the accounts, how those are received and how those are dealt with. And again, faultless, I would say, in terms of how the team has behaved. So our team has very much enjoyed working with South Staffordshire, and that you certainly don't get that across every council. But it has been an excellent process, and for us to be in this position, which, as I say, not many councils are in this position where we're on the cusp of concluding the work and issuing a clean opinion, is testament to the calibre and quality of both the individuals involved and also of the work that's produced in supporting the accounts and shared with us. So this report, as I say, sets out the key things to share with you. John made reference to the pension changes, so I will summarise those in as simple a way as possible, made for my benefit as much as anyone else's. It is an incredibly complex area, as you can imagine. So each year the council is required to set out what its net pension liability is. That is essentially what would it still owe if it had exhausted all of the assets in the pension fund. How much would it still owe to pensioners if they all lived 10, 20, 30, 40 years from now? The positive performance of the stock market over the past couple of years resulted in an initial pension asset. For the asset to be recognised in the accounts, that asset needs to be above a certain threshold. So it's not enough to get a simple asset that, your assets are worth X and your liabilities actuarially are worth just less than X. There's an asset ceiling which also needs to be applied, and the council did in fact apply that in the financial statements. And then there were further considerations in terms of potential future service costs or future costs relating from past services already taking place, which may not necessarily have been realised, but could be realised in the future. So it is, as I say, incredibly complex. Actuaries are involved for the council, and we also the work is also reviewed by an actuary that advises auditors as well. In undertaking this work, what it was identified that this approach also needs to be applied to the prior year. However, that's a relatively new view. That wasn't a settled view in the prior year. So the council prepared their accounts on the basis of the best information available at the time, and following them and met the statutory deadline, which is obviously key. Subsequent to that, the view became more settled, and then we engaged with management. Management engaged with the actuary, and updated figures were produced. And these figures are now reflected in the financial statements that you have in front of you, and also we've reflected those in our report. It's having said all that, it's incredibly complicated, incredibly technical. Makes absolutely no difference to the general fund outturn position. That is what matters to everybody. And so despite all that work, it doesn't actually change the performance of the council for the year, but it is something which both management and we, from both accounting and auditing standards, are required to go through in now quite a lot of significant detail in order to get to the correct figures. The other point I would just wish to raise, so the property, plants and equipment, again, is always a fairly complex process. Some of the council's assets are valued on what's called an existing use basis, which is slightly more complex as valuations go. And we also sought the support of an expert valuer, which corroborated the approach taken by management's valuer and indeed enabled us to gain assurance over the figures in the accounts, which is the other large balance that you'll see on the balance sheet. John referenced the reserves position with the council. One of the indicators that we look at in terms of reserves is what's called the minimum revenue provision. Again, a very technically complex calculation, which in summary form aims to put a representative charge to the INE each year to reflect the cost of the assets that the authority holds and uses for operational purposes. We're comfortable with the calculation, and we've looked at it. The observation that we put in the report is that it is a fairly low percentage against the authority's assets and its capital financing requirements. And so one of the recommendations we put in here is just to reconsider whether it is sufficiently prudent given the size of the authority's asset base. That's not something to be changed in this particular financial statement. It's something for future years to consider as the MRP policy is approved by members each year. In terms of the value for money work, we will share our more detailed report in terms of value for money findings at a later date. But for the purposes of this report, we consider whether there are any significant weaknesses we believe are present in the authority's arrangements. And our view is that there aren't any. And so our opinion would be unmodified in respect of the value for money arrangements in place as well within the council. And of course, we've also not identified any reason why we need to consider exercising any of the statutory duties we have available to us as auditors in terms of other public interest or advisory notices or anything such as that. On page 6 of the report itself are the quality indicators. They're all green. The one amber one isn't a reflection of the quality of the accounts or working papers or indeed what management has done. It is amber purely because of the additional work that was needed over the pension side of things, which, as I say, was a result of a settling of an approach which took place after the accounts were produced. And materiality for the audit was £1 million. In essence, that means were the accounts to be misstated by up to £1 million, in our view, it wouldn't impact the reader, but we report everything to you, which is greater than £50,000, which is our triviality level. You'll see that there's very little that we're reporting to you, both in terms of adjusted adjustments and any unadjusted misstatements, which is a reflection of the quality of the accounts that we received, because it's, again, it's not always the case that that's a small list, and so the fact that it is again is great. I'm going to hand over to Martha, who will go through some of the key findings in terms of the significant risks that we did look at during the year, and then happy to take any questions that members may have in terms of the work we've done.
So much, Paul. Thank you so much, Chair. So I'm just going to touch on the significant risk areas. I think Paul has already elaborated on the net pension liability, which was also a key accounting estimate. So some of the significant risk areas that we had was the management overrides of controls. Our work involved testing of journals, documenting processes around those. Pleased to see that we did not identify any issues. And then we also rebutted the fraud in revenue and expenditure recognition. We did perform work, but at this point, we have nothing to report. We're still finalizing a few issues of that, but I'm happy to say that at this point, we have nothing to report on. And then Paul also touched on the valuation of land and buildings. We obviously assessed the reasonableness and assumptions that the management expert used in the valuation of land and buildings as at 31 March 2024. We had to engage our audit expert so that they could evaluate the complex yield assumptions used when arriving to the existing use value of the land and buildings. I'm also happy to say that we didn't identify any issues regarding PPE valuations. I'm not going to touch more on the valuation of the net pension liability, as Paul has already touched on that. The only bit that's outstanding regarding the net pension liability is the letter from the pension fund auditor, KPMG. We have made some follow-ups in terms of when we can expect to get the report, hopefully to be in December, and we can get to conclude the section. Other issues that we have identified, Paul has already touched on the MRP, which is the minimum revenue provision. So I won't say much on that. And then in terms of other adjustments, we had some disclosure adjustments, internal control recommendations that the management has already addressed or commented on in the report. In terms of the prior recommendations, there was an issue regarding cutoff. We did perform our work on cutoff and we didn't identify any issues. The last bit that I'm going to touch on, if you turn your report to page 32, which talks about the audit fees, as you can see that the audit fees has increased from the initial, which is the base fee. The increase in the audit fees is a reflection of the additional work that we had to complete, which had not been initially scoped when the base fee was determined. So you see that some of the work is around the pension funds audit, the involvement of our auditor expert. Yeah, so that's mainly it. I think I'll hand over to Paul just to summarize if there's anything else that I've left out. Thank you.
Thanks, Martha. So essentially the key elements of the work and the reporting we detailed, there's more in the report. As Martha said, we're waiting on the pension fund letter. One thing actually I forgot to mention, but just to point out, there has been a change of the pension fund auditor from the prior year to the current year. What that change means is that the current year auditor wasn't the auditor of the pension fund at the time of the last triennial valuation, so they're unable to give us the full assurance anything from before this year based on the member data going back to the last triennial valuation. So we've been in touch with the previous auditor of the pension fund and obtained assurance going back to the triennial up to last year. Once we receive this year's, our final bit of work to make sure that there's no residual gap between the two lots of assurances, and just to ensure that we do that, we'll have everything we need from the pension fund auditor. Happy to take any questions that members may have.
Thank you very much for that. Yes, it was nice to hear what you had to say. Any questions? Chris?
Yes, thank you, Mr. Chairman. I've got a couple of questions on the amber categories. But first of all, thank you to the team preparing the accounts and for the auditors for auditing them. It was good to hear that beginning of the presentation that we are doing well and that the process of preparing the accounts has gone smoothly and there's a good relationship between the council and the auditors. The two questions I had on the amber findings. The first one on the minimum revenue provision. I just wanted to get a better understanding of the rationale behind the minimum revenue provision being as low as it is. I know there's a proposal that it's going to be on the February committee meeting, which I believe is quite early in February, because I didn't look it up. I think it's the first week. So just a rationale behind that, because I've got things in my head as to reasons why that might be. And my second question was regarding the other amber one, other than the pension scheme. There was some, well, it mentions suspense items. I was just wondering how many transactions were involved, whether it was just one transaction or whether there were many transactions in that account. Thank you.
Thank you for those questions. Is that, you're happy, John, intervening?
Thank you, Councillor Evans. Very good question on the MRP. The rationale behind it, we've never, whilst Gazette's calculation was based on a capital finance requirement, our actual rationale for MRP has been on the asset lives of each individual asset that we are effectively still paying for, whether for internal or external borrowing. So in simple terms, if we've got an asset of £1 million that we think has got a useful life of 10 years, that would contribute 100k to the minimum revenue provision, such that it's effectively fully financed by the time when we'd expect it to be obsolete and we'd have to consider buying a new asset to replace it or whatever we want to do. And it just so happens that in coming out of that calculation to fund our assets, when the assets had a look at it, they've helpfully pointed out to us that just in 23-24, it meant our MRP looked a little bit lower against as a proportion of the CFR than be ideal. I did speak to Martha actually just before coming in, because one question we're quite interested in is if as a percentage of CFR that is quite low, what would be considered to be an appropriate level? And to be fair to Martha, she wasn't certain, but she did suggest to me 2% in our conversation across and earlier. And that's actually quite encouraging because 2%, we had about £500,000 as our MRP in 23-24, whereas 2% would be 600k. So we weren't a million miles adrift. And secondly, the bit that was outside the scope of this audit, but myself and Beck and Lucy were aware of this, is that our MTFS, as members will see years, through the calculations we do and the methodology we use, there is a natural progression upwards in our MRP. So whilst we're really grateful to the recommendation being made, because it has focused our mind and made us look at it a bit more scrutiny, without actually doing anything different, without changing anything, by natural progression, our MRP is set to increase in the next few years to be a percentage of our capital finance climate. This is greater than the thresholds that that Suzette's looked for, if the 2% is correct. I did put them off on the spot, and that's good. It's great to hear. So I hope that answers your question on that side, that there was a rationale behind what we're doing, and it might just have been the way we do it just create a little blip in 23-24 that took it under that threshold, and it's due to increase. And unfortunately, I don't actually know the answer to your question about the other thing about the cements. I suspect it's closer to the first. It might be more than one item, but I suspect it wouldn't have been lots and lots of items, but it might have been more than one. If it's okay, Councillor, can you leave it with me to find out and give you an exact answer?
Yeah.
And thank you very much for your questions.
Thank you, John. Yes, Martin. Okay.
Thanks, Chair. Just a quick question around pension, and obviously we're waiting for sign-off for pension. What triggers, presumably, the return to this committee if there's a negative or adverse report from a point of view? Who would determine that it would come back for review? Back to this committee? Is that the case?
I think I can say if it was in any way worse than we expected, I think we're expecting it to be actually good news. So therefore, it wasn't good news, and it was in any way less than we'd anticipated. I think we'd definitely bring it back and look at it in light of the new information.
There isn't criteria as such. From our point of view, it would be if there was any material adjustments required to the accounts. As Paul referred to earlier, the good thing about the pension position is that it doesn't actually affect our general fund reserves, which is, you know, the important thing for us. But I think if anything came back from that pension fund audit, which suggested that the pension position we did is materially different, then we would certainly come back to the committee and present the accounts again. If there's not a significant difference in there, then we would take the delegated authority to sign off.
Any more questions? In that case, I mean, we've been listening very carefully to see if there was any areas we should have concern about that we didn't know about. Very pleased to hear what you said. Certainly personally, it gives me a lot of reassurance. We're very close to the team, that particularly as you hear for the first time a new pair of eyes, and what was really, I think, a glowing report. I think the team should be very, very proud of that. And thank you very much for saying so. As far as the recommendation goes, I get this. Can I read off yours? I'm going to read that because I think it's important. Paragraph 2 of the notes, a bit long-winded, but read it out.
Oh yeah, the number of.
The recommendation is Audit and Risk Committee note the statement of accounts appended to this report, including the draft audit opinion contained within. Audit and Risk Committee note that the audit of the Staffordshire Pension Fund, which is currently separate, which is conducted separately by KPMG, is yet to be finalised. Audit and Risk Committee note that the draft audit funding report is also caveated around final audit checks and review to be completed. Audit and Risk Committee authorise the Chairman of the Audit and Risk Committee, alongside the Section S151 officer, to formally sign the statement of accounts on notification that the pension fund audit, alongside final audit checks and review, have been completed with no requirement to amend the statement of accounts as appended to this report, and notify the committee accordingly. In the event that the conclusion of the pensions fund audit or final audit checks and review require amendment to the statement of accounts as appended, the revised statement of accounts shall be brought to a subsequent meeting of the Audit and Risk Committee approval. Are you all in favour of accepting that recommendation? Thank you. Yes, I will actually. Yes, yeah. That brings us to item number 6, quarterly Treasury Management Report, quarter 2. Back to John. Thank you.
Thank you again, Chairman, and a report that committee members will be familiar with, that after approving the Treasury Management Report, the Treasury Management Strategy Report for each year, we routinely bring to yourselves reports each quarter as to how we're progressing from a cash management perspective. It is, as always, again, a fairly technical report, but this itself gives me an opportunity to do a little plug that I've volunteered myself to deliver some training to members of this committee. I'm up in, I think, just a couple of weeks' time on Thursday, the 12th of December, when I'll try to explain some of the concepts which will include minimum revenue provision and capital financing requirements, internal borrowing, external borrowing, and all the other aspects going to Treasury in some more detail to hopefully illuminate members further beyond this particular report. And in terms of our reports at quarter 2, one of the key things is our interest earned, and the story that ties back to the statement of accounts that we've just presented, that in 23-24, where we actually had a very low budget for interest on the basis we're expecting interest rates to come down, but then massively overachieved against it in 23-24, achieving over £1 million worth in interest on cash balances. We built an expectation into our 24-25 budgets. So we're not expecting as much as £1 million, but we did build in the fact that over 600k would be our expectation, and therefore less pressure to find savings in our budgets. And the good news for members of this committee, with interest rates just sticking around a little bit higher than we anticipated, At the halfway point in the year, we've more than achieved halfway against those targets. So around about close to £400,000 in total achieved. With interest rates coming down and lower cash balances, we can't guarantee to members of this committee will meet that target precisely. We certainly won't be far off. There's every chance that we'll slightly exceed our expectation and therefore have a small benefit to our general fund balances and to our treasury activities in the current year. The other main purpose of the quarterly reports is just to reassure members that we at all times adhere to the constraint you set us when we set treasury management strategy. So when it comes to investing monies, the key things that we always want to achieve are security, liquidity and yield in that order. Security money being absolutely paramount. And in order to help us achieve that, you tell us who we can invest with, how much we can invest with those organisations and how long for. And those are immovable constraints that the officers of this council will always adhere to. But we reproduce these reports just to let you know where we have invested your monies, and you can be assured that having set us those parameters, those are at all times met in order to ensure we are investing. We're doing so with safety of the council's monies as a key factor. And that hopefully the report is fairly self-explanatory apart from those main aspects. But as always, Mr. Chairman, I'm happy to take any questions the members of the committee may have.
Thank you for that report. Any questions from the floor? Chris?
Thank you, Mr. Chairman. Just a couple of questions. The first one on interest rate. Mentioned interest rates, John. We had the budget recently on the 30th of October, and there's a lot of suggestions that that budget might have an impact on interest rates. Is there anything from your point of view that indicates the interest rates might stay at a higher level for longer? And the second point I just want to pick on, right at the beginning, we've got borrowing costs in the quarter were recorded as 59,233 against a budget of 58,750. So I was just interested in background to that. Thank you.
Again, thank you very much again, Councillor Evans, for the questions. The answer to interest rates is we are expecting interest rates to come down, exactly as in accordance with the indication received from the budget. We receive weekly updates from Link, our Treasury advisors. Their expert emails us every single Friday with his interpretations of various market indices, of which interest rates is one of many. The good news from our perspective is that our expectations of interest rates are fed directly into the medium-term financial strategy, and the presentation that Beck gave to yourselves and our members on Monday will have incorporated our expectations, both of how much cash we expect to have in hand over the course of the next 5 years at various signposted moments during the next 5 years, alongside our expectations of what we think interest rates will be over the course of the next 5 years. So when you see the MTFS and the budget presented to you in February, you can rest assured that does include our very latest assessments of where we think interest rates will be, alongside how much cash we think we'll have. So we won't be hostage to fortune. We won't be budgeting for income receipts based on 5% interest rates when there's expectations they are coming down. Obviously, if interest rates change beyond that in the future, that will have an impact. But we budget according to the best knowledge we have available at the given times that we set the budgets. And then the second question related to borrowing costs, that relates to the 15 million outstanding borrowing that we have. That's where the interest rates that we pay on it are. And as you see, it's only marginal differences, often just down to roundings amongst it and any sort of small amounts of borrowing that we might have over and above. But the bulk of it's the 15 million, and that's the quarterly interest rate costs against that £250,000 borrowing. Sorry, that £15 million borrowing. And hope that answers questions.
Thank you, John. Any other questions? I take it we accept that report. Item number 7, can we can have the report of our internal audit progress. Alice, please.
Thank you, Chair. So this is the regular progress report updating members on the delivery of the 24-25 internal audit plan. The details of which are on pages 192 and 193 of your pack. So as at the 22nd of November, 21% of the audit plan has now been completed, with a further 21% of the audit plan in progress. Although that number may seem a little bit low, we do undertake the large portion of our work in the latter parts of Q3 and Q4 due to the financial nature of the systems that we look at. And the remaining work is in preparation and is scheduled in to be undertaken in Q4. So since the last Audit and Risk Committee held in September, there's been one piece of work that's been finalised, which relates to the Capita IT system, and an adequate assurance opinion has been given for that piece of work. In addition, there are further 3 pieces of work that are at draft report stage, and they're detailed at paragraph 3.4 of the report on page 192. Supplementing our systems audit work, we do undertake a continuous controls monitoring programme, and that really is using the council's data to try and highlight and detect any sort of anomalies that need further investigation. So during the first part of the year up until October, we've looked at potential duplicate creditor invoices, various purchase card transactions, looking at the appropriateness of those transactions, as well as looking at any potential duplicates between purchase cards and creditor payments, and there are no concerns to note. Also, 2024 is the year that we are participating in the latest National Fraud Initiative. This is a mandatory initiative that takes place biannually. So this is the year that we upload the data to the Cabinet Office's portal. The deadline was the 25th of October, and we submitted all of the data sets by the 17th of October, so ahead of the deadline, which was great to hit that. Those potential matches are due to come back towards the end of December, if not January, and the counter fraud manager will look at those matches and assist the council in investigating any potential matches that need to take place. Also, just to mention as well, a couple of things that as part of our counter fraud plan, we're currently looking at revising our internal audit and fraud intranet and web pages, and that work will be ongoing until the end of the financial year. Also, just finally to note that previously we've brought to this committee the investigation report relating to the theft of cash at a leisure centre. Well, there is a trial date that's now been set for July 2025, and the counter fraud manager will be assisting the council when that goes to trial as well. And clearly we'll update this committee on the outcome of the trial once that's taken place. Chair, happy to take any questions in relation to that report.
Thank you very much for that. Any questions from the floor?
Thank you, Chair, and good afternoon, members. So yeah, I'm pleased to be here this afternoon on behalf of Lorraine, and I'll be covering the whistleblowing policy and also the anti-money laundering policy as well. So firstly, the council's whistleblowing policy was last adopted in February 2022. It's recently been reviewed and is submitted to this committee this afternoon for approval. In the report, Lorraine has set out the legal background at 3.1 for reference, and just to confirm, there have been no whistleblowing reports since the last report to this committee. As members can see, there's no significant policy changes that are being proposed to the whistleblowing policy. There has been a bit of an update on the corporate branding and also references to the outside bodies. Following approval, we'll make it available to all staff, replace all previous versions, and staff are going to receive training on the policy and on other anti-fraud initiatives as well. And just for information, the next review date has been set for October 2027. Thank you, Chair.
Thank you. Any questions on that? Thank you very much indeed. Yes, yeah. All right, on to item number 9, anti-money laundering policy. This is going to be brought to us by Becky, and up to you.
So the anti-money laundering policy, so just for information, Lorraine is the council's appointed money laundering reporting officer and has recently reviewed the anti-money laundering policy, which again has been submitted this afternoon for approval by this committee. So again, just for information, the policy was found to be compliant with generally accepted best practice in local government. And again, we aren't proposing any significant changes. So we've updated the details of the reporting officer and also the deputy reporting officer, which is Beck Mayer as the deputy officer. And again, the next review date has been set for October 2027, which is in line with the whistleblowing policy as well. Thank you, Chair.
Thank you for that. Any questions from the floor? Just out of interest, is the policy ever triggered in the last 12 months? Did it raise any alarm bells or any members of staff report anything that was investigated? Well, you might not know, but
Yes, I don't believe so, but I will double check with Lorraine and get back to the next committee if there has been any.
it's good it's there anyway. Everybody happy with that report?
Thank you, Chairman. Good evening, members. This report sets out the update on the strategic and high scoring operational risks as at Q2 of the current financial year. There are Appendix 1 sets out all of the council's strategic risks and also the high scoring operational risks. The council currently has 10 strategic risks, of which 4 are rated as red and therefore high priority. There are also 5 operational risks which score above 12 and are included on the appendix for members' awareness. The strategic risks, there have been 2 that have increased their score since Q1. The first one is number SR1, and that relates to the failure to short and snappy title this one is failure to deliver sustainable development across the district and to protect from inappropriate development. The score on that was previously 8 and it's now increased to 12, so it's still amber, not red, but the reason for that increase is the publication of the new national policy planning framework, which has created a further delay on getting our local plan in to be approved. And the second one where there has been an increase is the impact of the national pay policy on the council's MTFS, which has now increased from 12 to 16, and I'll touch on that now when I talk about those risks in a bit more detail. So the national pay policy risk, the reason for that increase is because in the budget on the 30th of October, it was announced that the minimum wage will increase by 6.7%, and that will have an impact on the national pay spine and the national living wage, which could well mean that there will need to be a deletion of some spinal column points and disruption to the council's job evaluation scheme pay structure because of the reduced headroom between that national living wage and the bottom of our spinal column points. That could therefore have increased cost implications on the medium-term financial strategy. So that is being worked on by our HR colleagues at the moment, and we will of course feed any cost implications into the medium-term financial strategy when we can. The score around the local government policy and funding has increased also. Again, that is because the government has now made clear that they will be making changes to the local funding regime in 26-27, and in fact will be making some minor changes to the distribution of grants in 25-26. Therefore, that score has increased because we now don't know that the likelihood is as high as it can be. Temporary accommodation score, the score on that one remains the same. You received a briefing note following the last meeting when you asked for additional information on that. That was circulated after the meeting, but the position on that still remains. We are still seeing increases in the number of people representing as homeless, and therefore seeing an increased rise in costs from those. As you're all aware, we have a reserve set aside for that. We have purchased 2 properties out of that reserve to be used for temporary accommodation, and still have the remaining £600,000 available within that reserve. The last score, strategic score, with a score of 15, is the business continuity and emergency planning risk. Again, that hasn't changed since the last meeting. That, as I mentioned, there are 5 operational risks that we've included, and 2 of those are classed as high priority. We have one that relates to the failure to protect the natural environment and deliver biodiversity. That links through to the NPPF as well, and the impact of the delay in the local plan. The other one, we will go to a private session if members wish to discuss that one. 2 operational risks have reduced since last quarter, and therefore aren't included in this report. The first one relates to the postal service, where previously we've been given notice on that service. We've now got a new provider in place, so that score has reduced. And the other one relates to the dilapidation of leisure facilities. We've now reduced the score on that one because the previous score suggested that the buildings were already in a position of being dilapidated, which isn't the case. The risk is actually around what happens when and if that occurs. So we have lowered the score on that one. In terms of the operational risks, they are managed within service areas at the moment and at ELT level, and they are reviewed quarterly to decide whether any need to be escalated to the strategic risk register. In terms of the strategic risk register and those highest scoring operational risks, we meet on a quarterly basis as a corporate and extended leadership team to discuss those and decide whether there needs to be any changes in the scoring or any further mitigating actions taken. So the recommendation is just for the committee to note the quarter 2 update, but I'm happy to take any questions. Back to you, Chairman.
Thank you very much for that report. I feel we should go into private session otherwise it's not mentioned here at all. Okay. Is Lorraine with us?
I am, Chairman. I am virtually. Apologies, I can't be there with you in person. So if you do want to go into private session, Chairman, you will need to take a vote on that. So if you're comfortable, if you propose it and another member can second that motion and then go into private session, then that will be procedurally correct.
Okay. Right. I propose that we go into private session to discuss the risk here. All in favour? That's unanimous. Do I read out the?
That's fine, Chairman. If members have resolved to go in, then that's fine. We'll just exclude the public. So the recording can stop now.